On a quiet afternoon in Omaha, an era ended without a single dramatic headline. No press conference. No farewell tour. Just Warren Buffett, 95 years old, quietly stepping down as chief executive officer of Berkshire Hathaway, a company he built from a failing textile mill into one of the most powerful financial institutions on earth. For 60 years, Buffett was Berkshire. Now, Greg Abel holds the reins. But before we talk about what comes next, we need to talk about what Buffett leaves behind, because it isn't just money. It's a philosophy, a discipline, a warning. And for investors here in India, whether you trade on the NSE, track the Nifty and Sensex daily, or run a modest SIP, his final lessons matter more than ever. Let's walk through Buffett's last day, his final letters, and the blueprint he left for every investor who comes after him. Buffett didn't leave suddenly. He'd been preparing the market and Greg Abel for years. Abel, who ran Berkshire's energy and non-insurance operations, was long known as the heir apparent. What made Buffett's exit different from most corporate successions was the complete absence of chaos. No boardroom battle. No activist investor forcing change. Just an orderly, almost boring transition which, if you know Buffett, was exactly the point. He always said a great business should run so well that even mediocre management can't ruin it. His final act as CEO was proving that Berkshire itself had become that kind of business, a machine built to outlast its builder. For Indian investors used to watching succession dramas at family-run conglomerates, this is a masterclass in itself. Business continuity isn't about charisma. It's about systems, culture, and trust, the same principles SEBI encourages listed Indian companies to build through strong corporate governance codes. Here's where it gets interesting. Buffett didn't hand Abel a company fully invested in equities. He handed him a fortress of cash, roughly $397 billion sitting in short-term treasuries as of early 2026. Why does that matter? Because Buffett spent his final years as CEO repeatedly warning that markets had become, in his words, more casino than marketplace. Speculative trading, short-dated options, zero-day contracts, and prediction markets exploded in popularity. Activity Buffett viewed less as investing and more as gambling dressed up in financial language. Sound familiar? Because it should. Back home, SEBI's own data has shown that the overwhelming majority of retail traders in futures and options lose money year after year. Buffett's casino warning wasn't aimed only at Wall Street, it was a message for every retail trader in India chasing quick profits through FNO instead of building wealth the slow, boring way through equity ownership and disciplined SIPs. His massive cash reserve wasn't fear. It was patience. Buffett always said cash is a call option with no expiry date, ready to strike the moment fear creates opportunity. Buffett's last annual shareholder meeting in Omaha will be remembered for more than nostalgia. It was also the meeting disrupted by an AI deepfake incident, of fabricated videos circulating online, falsely showing Buffett endorsing a crypto investment scheme. The irony wasn't lost on anyone in the room. Here was a 95-year-old investor, famous for warning about things he didn't understand, becoming a victim of the very technological disruption reshaping global markets. Berkshire's team moved quickly to debunk the fake, but the incident became a symbol of a new era of risk, one where misinformation itself is now a market force. For Indian investors, this is a wake-up call too. SEBI has repeatedly cautioned against fraudulent stock tips and deepfake-driven pump-and-dump schemes circulating on social media and messaging apps. Buffett's own image being weaponized should remind every retail investor: verify before you trust, especially when the message promises easy money. So what exactly does Greg Abel inherit, and what do we, as investors, inherit from Buffett's 60 years at the helm? First, a culture of radical patience. Buffett held Coca-Cola for decades. He built Berkshire's insurance float into a self-funding investment engine. He proved, again and again, that time in the market beats timing the market, a lesson every SIP investor in India already lives by, even if they don't realize it. Second, brutal honesty about mistakes. Buffett openly discussed his failures: Dexter Shoe, U.S. Airways, Energy Future Holdings, not to punish himself, but to teach. Few CEOs anywhere in the world are that transparent about their own errors. Third, a warning about leverage and speculation. Buffett spent his final years cautioning against excessive debt, short-term trading, and the dangerous belief that markets always go up. In a country where retail F&O participation has exploded alongside rising Nifty and Bank Nifty volumes, that warning deserves repeating, loudly and often. Fourth, Berkshire itself a company engineered to survive without him. That, more than any specific stock pick, may be Buffett's greatest investment of all. Greg Abel now faces the hardest job in corporate America, running a company defined by someone else's legend. Analysts are watching closely to see how he'll deploy that enormous cash pile, whether he'll pursue more aggressive acquisitions, and whether Berkshire's insurance-driven model can keep compounding at the same extraordinary pace. But Buffett didn't just leave Abel a balance sheet. He left him and every investor watching from Mumbai to Manhattan a set of principles that don't expire with retirement. Buy quality. Be patient. Avoid leverage you don't understand. And never mistake speculation for investing. Warren Buffett's last day as CEO wasn't really an ending. It was a handoff of decades of hard-won wisdom to anyone willing to listen, whether you're managing billions in Omaha or running a modest SIP portfolio here in India. The casino will always be open. The question Buffett leaves us with is simple: are you gambling, or are you investing? If this video helped you think differently about your own portfolio, hit subscribe, drop a comment with your biggest takeaway, and share this with someone who needs to hear it before their next trade.